Welcome back to the YouTube channel. My name is Emmanuel. Let's get right into the video. Crude oil may not survive the next 5 years. Why is it important to look at the prices of crude oil? It is important to look at the prices of crude oil because it affects inflation. And inflation here is simply the rise in price of goods and services. You may ask, how does this affect the price of goods and services, or how does crude oil affect inflation? So I'll use this simple example to explain how crude oil affects the price of goods and services. So using this example, we can see crude oil. Then from crude oil, we get fuel, which is diesel and petrol. And this fuel, meaning petrol or diesel, is what we use to fuel vehicles to move from one place to another. So this here serves as means of transportation. So in this example, I'm using a pen as my product. So our product here is pen. So our $6 here is how much I spent on acquiring the pen, or how much I spent producing one pen. So I spent $6 on this pen, and to transport this pen from the factory to the customer is $4 in this example, where we'll come and get our landed cost. Landed cost here simply means how much do you spend on the pen once it lands in front of the customer. So after transportation, that is what we call landed cost. So product plus transportation, we get our landed cost. How much did I spend on this pen once it lands in front of the customer? So once this pen is in the shop, how much did I spend on this? So in this example, we spent $10 on the pen once it's in front of the customer. So if we spend $10 once it's in front of the customer and we are trying to make profits, you can make $1 profit, $2 profit. So in this example, we want to make $5 profits. So to make $5 profits on something that cost us $10, we need to put it at a price of $15. So once we sell this pen for $15, our cost was $10, profits is $5, and our price is $15. So using this same example, assuming the price of crude oil increases, so let's say from $2 to about $4, so we put here 4. If the price of crude oil is now $4, let's assume this as well gets to $5, then transportation to gets to $6. So here as well, we are going to assume the cost of the pen remains the same. Even if the cost of the pen remains the same, what is going to happen? So let's assume the cost of the pen is still $6, and now our transportation moved from 4 to 6. So instead of 4, we have our transportation at $6. So now our landed cost, which we already said is the cost of the pen once it lands in front of the customer. So the cost of your pen plus the transportation. So the cost of the pen, which is $6, plus the transportation of $6, gives us a landed cost of $12 in this scenario. So once we have our landed cost of $12, so landed cost of $12, then $12, if we're assuming we want to still make the same amount of profits the previous year, so this as well, we want to make a $5 profit. Once our cost now is $12 and we want to make a $5 profit, so 12 plus 5 gives us $17. So you can see in this scenario, the cost of the pen did not change. The only thing that changed was the transportation cost. And why did the transportation cost increase for this pen? It increased because of fuel cost. And why did fuel cost increase? It increased because of the price of crude oil. So it is very important to know what crude oil is doing. Then we can now trace it out into the economy to see how prices are likely going to react based on the main source or the main raw material here, which is crude oil. So to now look for the prices of crude oil, we simply search crude oil, CRUD space oil. So as we search crude oil, you see two prices of oil. What does this mean? So the first one, WTI crude oil. This simply means West Texas Intermediate. The Texas is a state in US. So this is simply drilled and extracted in USA, and is also drilled and extracted on land. The second one here is Brent crude oil. This is drilled and extracted on sea and located in the North Sea in between the UK and US. At the side of this, you can see we have US oil and UK oil. These words here are simply what we call ticker symbol. What is a ticker symbol? It's made up of two words, ticker and symbol. A ticker simply is a code. How is this code represented? Is it represented by numbers or letters or a mixture of the two? In this case, our symbols here are represented by letters. So a ticker symbol here is simply a code of letters used to represent an asset or a financial instrument. So for WTI crude oil, which we know is for the US market, the ticker symbol for WTI is US oil. So for you to just look for WTI crude oil, you type US oil. That is the ticker symbol. That is the code for this instrument. And the one for Brent oil is UK oil. As we already know, Brent oil is located in the North Sea in between UK and Norway. So that is why we have the ticker symbol for UK oil, because it's more in the UK waters. So once you hear UK oil, that's the ticker symbol for Brent oil. Once we hear US oil, that is the ticker symbol for WTI crude oil. And WTI crude oil serves as a reference price for USA. And Brent oil serves as a reference price for Europe, Asia, the Middle East, and Africa. So the price you use depends on where you are located. So here is just for the US markets, and the Brent oil is basically the rest of the world. So the WTI crude oil is simply the reference price for the US market, and the Brent oil also is simply the price used for the rest of the world. Their prices are similar, just about $2 to $3 difference. So let's see WTI. So you can see this is WTI. The price for WTI is $75. If you go and look for Brent, so now we know Brent is UK oil. So once you see UK oil, that's for Brent, is $79. So usually the price difference between the WTI and the Brent oil is about $2 to $5 price difference. So they move similarly. You can use anyone to look at the price of crude oil. I personally use US oil because that has more data. This chart is the UK oil. You can see from the beginning, for the candle starts looking at it down, it starts 1989. But if you go to US oil, go back to US oil, which is the WTI crude oil, we click that, we can see that does not start from 1989, but rather starts from 1983. So I have more data. That is why I prefer the US oil. So let's look at US oil. We start from the monthly, we type 1M, or we go to the top over here. This signifies the timeline. So how long did the candle close? So we have 4 hour to 1 year, 12 month meaning 1 year. So we have here 12 months, 6 months, 3 months, 1 month, 1 week, 1 day, and 4 hour. What does this mean? Right now it's on M. So this is 1 month. So it means one candle means 1 month. So which candle we are in is a month. The next candle is 1 month. Next candle is the previous month. Once I click 12 month, it means one candle is 12 months, meaning one candle is 1 year. So this is a yearly candle for US oil or crude oil. This is the yearly candle for 2026. So we opened here. We are now here. This is for 2025. This is for 2024. So depending on the timeline I use, you will see how long the candle takes to close. So let's start with the yearly. If you look at this chart like this, it looks random. We're just going up, down, up, down. You can't see anything regarding this. But there was a cycle analysis which I was able to notice on crude oil, which I want to talk about today. So I'll put my lines on the chart so you can see what I noticed on crude oil. So this right here is what I noticed on crude oil. Let me expand this a little bit. So you can see this is crude oil. This is the yearly chart. Why is this the yearly chart? Because I'm on the 12-month time frame. So this is the yearly chart for crude oil, and there are some cycles which have continued to repeat over and over again. So we start from the red vertical lines. Here are red vertical lines. These are red vertical lines, red vertical line, red vertical line. What do these signify? They signify peaks of crude oil. So peak meaning a top price of crude oil. So we can see this is a top price of crude oil. This is a peak of crude oil. This as well signifies a peak of crude oil. This as well signifies a peak of crude oil. We now see from this peak to this peak, meaning come down to the candles. From this peak to this peak, how long did it take? Then from this peak to this peak, how long did this take? So this is what I'm looking at. So you can see from this first initial peak to the next initial peak, this takes 11 years. I'll explain why this is 11 years, not 10. And here, 1 bar means 1 year because of what I explained previously. Once we're in a 12-month chart, 1 bar is 1 year. If you go to the monthly, it means 1 bar equals 1 month. If you go to the weekly, 1 bar equals 1 week. So let's go back to where we are. 1 bar equals 1 year or 12 months. So once you see 11 bars, it means 11 years. Once I'm on the 12-month chart or the 1-year chart. So this 11 years, from this peak to this peak, 11 years. This peak to the next peak also took 11 years. So meaning this peak here to this peak also took 11 years. So just looking at the peaks, we can see we have peaks of 11 years. This is the initial peak is 11 years. I'll explain later why this is 11 years, not 10 years. So this is 11-year peak, and next peak, 11-year peak, next peak, 11-year peak. So are we likely going to have an 11-year peak in crude oil? We just wait. So now coming down to the green lines, which are the bottoms. This green line signifies the bottom. Next green line, next green line, next green line. What do we see on that as well? From this bottom to this bottom, this as well is 11 bars, which is 11 years. I'll explain why this and this are 11 years, not 10 years. So from the next bottom to the next bottom as well, it's 11 years. As we can see, next bottom to this next bottom is 11 years. Next bottom to this next bottom. Are we likely going to have 11 years? We'll wait and see. But as at now, everything is still playing out over the years. So now we can see we have our peak to peak to peak to peak of 11 years. Now bottom to bottom to bottom of 11 years. What do we have in between? So we see this yellow B to P. So bottom to peak. That's what it means. So from this bottom to this peak, how long did it take? Look at it here. You see it's 2 bars. So 2 bars here. Since we are on the yearly charts, it means 2 years. So this took 2 years. The next bottom to peak, how long did it take? Let's look at the next bottom to peak. So from this bottom to this peak, how long did it take? 2 years as well. Next bottom to peak, how long did it take? 2 years. Let's see the next bottom to peak. How long did it take? 2 years. So this has occurred 4 times. So now just looking at these cycles, we can see we have every 11 years peaks, bottom to peak, 2 years. Not only that, we can look at the peak to bottom, so which signifies here P to B. So from this peak to the next bottom as well, how long did it take? So which I've written here, P to B. This is 9 years. I'll explain that as well. So this first cycle, I'll explain why this is like that. The next peak to bottom takes 9 years. Next peak to bottom takes 9 years. So from this peak to this bottom we see here, that's the calculation here, which is 9 years. This is the data we have as at now. So assuming this should continue repeating to how it has already been repeating since 1988. So you can see our bottom, initial bottom, looking at the bottom, green, January 1988. So this started from 1988. Since then has never changed. It has been happening over the next years. So right now we are in between the cycle. The next probable thing which is likely going to happen is a bottom, looking at this, because we have this bottom, 11 years later we have this bottom, 11 years later we have this bottom, 11 years later we have this bottom. Looking at the days at the down, so 1988 plus 11 years we have this bottom, which is 1998. 11 years later we had this bottom, which was 2009. 11 years later we had a bottom, which was 2020. Then 11 years later is likely to have a bottom in 2031, which is 5 years away. So going back to the first cycle, we can see from the peaks, this is 11, but this is showing 10, and I said this is 11. This is 11, this is 11, this is 11, this is showing 10, and I said it's 11. Why is this showing 10 and I'm saying it's 11? So we can now go back to the monthly. So the monthly chart, one candle signifies 1 month. So this is the first candle, which was showing 10 instead of 11. As you can see, we are in a monthly chart. 1 bar equals 1 month. So this was showing 11, this was showing 10. But once you come to the monthly, you realize that this is 122 months and this is 121 months. So once you come to the monthly, it means the first cycle is even longer than the second cycle. Why is this showing 10 years here and here is showing 11 years here? So once we're in 2026, January, February, March, so this signifies 3 months in 2026. Since we started in January 2026 and ended in March 2026, it's all in 1 year. So it's still 3 months. Once you look at the yearly, it's called 1 year. But assuming we have 2025 December, then January 2026, then February 2026, this is still 3 months. But once you go to the yearly, it started in December of 2025 and ended in 2026. So how many years does it involve? It involves 2 years. So even though once you come to the monthly, The first example we had January, February, March. This is 3 months. The second example is also 3 months from December to February. It's also 3 months. But once you look at the yearly, we started the first example in the same year. The next one started and ended in different years. So if you are counting from December, January, February, this is considered 2 years because the start happened in a separate year, the end happened in a separate year. That is why we have this. But once you come to the monthly, you realize that even this was even higher than this. So this is also considered 11 years, and this is also considered 11 years as well. So once we head here, we are in a danger zone. Why is this a danger zone? Because once we come and hit this 2031 to 2033 window, we are likely going to have a recession in that time period. So why do I consider this a danger zone? Because of a recession. What is a recession? I explained earlier, a recession simply is a period where a country's economy begins to weaken. So a recession simply is where a country's economy begins to weaken. And then what is an economy? An economy simply is a system people use to make, buy, and sell goods and services. So what do I mean by this recession and this economy? So using the same pen example again, looking at economy, I said economy is simply a system by which people make, buy, and sell goods and services. So let's say our good here is our pen. So we have our pen markets. So having our pen markets, so this is our pen market, and I said an economy simply is where people make, buy, and sell goods and services. So we need these three. So first one, we need to make goods. And second one, we need to buy goods. And the third one, we need to sell these goods. So once we make the goods, we can buy these goods, then we come and sell. So I'm using this to explain how an economy works, or what is an economy in simple terms. So these are all linked together. All these are linked, and it's all inside the pen markets. So make here is production. Then we have sell here is simply supply, or how many pens are available. So let's say pens available. So we have pens available. Then buy here as well is demand, but we can say people willing to buy. So let's say people willing to buy. So people willing to buy the pens here is our demand. So this is what it means. So making the pen is our production. How many pens are available is selling or supply. Then buy here is how many people are willing to buy this pen. This is what I'm going to use to explain what an economy is. So assuming we have pens and demand increases, or people willing to buy increases. So this, as if this increases, so if people willing to buy goes up, we need to have more pens available. How do we have more pens available? We need to increase production. So the making process needs to increase, so production needs to increase. So once production increases, then the pens available also increases. Then people buy more, production increases. This also, then it's a cycle. So for production to increase, one, we need more employees to produce these more pens. So employment increases because more people need to be employed to produce more pens. So once we have increase in production, we have increase in employment. We have increase in employment. So this as well, increase in employment in the economy. Once this system is working, so once the economy is working or growing, we have increase in employment. As we are increasing production, more loans are taken for expansion. So here as well, more loans are granted. So increase in loans as well. Once this also increases, so we are hiring more, taking more loans, making more pens. If people are being employed more, they have more disposable income. And disposable income here simply means income you can dispose, or simply money you can spend. So the more people are being employed, the more money you are likely to spend. So in this economy where we have only pen, once you have more money, you are likely to buy pen. So these same employees are also going to buy more pens, means the buyers are going to increase, production is going to increase, sell less, more pens are going to be available, more people are making money, so they're going to buy more pens, and the cycle increases. So once you are being employed and you have wages and others, you are likely to spend. So we have increase in consumer spending. This is a trend since we like to see in a growing or a good economy. So once you see this increase in employment, increase in loans, and increase in consumer spending, this system we call the economy is working or is growing. So once we have a system where people buy and sell goods and services, we call this a growth or expansion in the economy. So this system of these three things happening is the economy here. Obviously, we don't only have the pen. We have the pen market. We have the pencil market. We have several things coming together to make the entire economy. I just use this to explain what an economy is. And I also said that recession is simply a period where a country's economy begins to shrink significantly. So this economy I explained here, this what I call economy, once this begins to shrink significantly, obviously we can shrink, but any shrink is not a recession. The drastic shrink in the economy is what we call a recession. So the recent recession, we all know 2020 COVID. So now we know what an economy is. We know what a recession is. Once this system, which we call economy, drastically shrinks, so instead of employment, we are going to have increase on employment. Instead of loans taken out, less loans are taken out, and consumer spending also reduces. So there is no need to have more pens available. Once we don't need to have more pens available, there is no need to increase production. We don't need excess workers if they are not needed. So they are going to lay them off, which will bring about unemployment. So once you see unemployment rising, you see loans not being taken out, and you see consumer spending stop. Once you are being sacked from the production line, you don't have enough disposable income, or you don't have enough money to spend on pen. So spending also drops. So during a recession, we'll see the hard 10 of these three. We have increased unemployment, we have loans not taken out, and consumer spending significantly reduces. So now going back to oil, we now know what an economy is. We now know what a recession is. So this 2020 was a recent recession. Let me use this indicator so you can see what I'm talking about. So we go to the indicator, we search US recession indicator, then we click this. This shows when the recessions occur on the chart. So I can change the color to red since a recession is not a good thing. So we change this to red. We can now go to the monthly so we see it. So now we have the red zones marking the recession periods. And we already know the recession periods here is a period where a country's economy begins to weaken or shrink significantly. So the recent one here, looking at the base year, was COVID, which was 2020. We had a recession for about a month, which was one of the shortest time. The one before that was 2008. Prior to that, we had a recession again in 2000, which was here, looking at the base. The recession happened in 2000, so we can go as far as we want. But looking at just these three, we can see something occurring with recessions and also the oil prices. So once you see, we usually have a recession right before the bottom or right after we peak every time. So this bottom of 2020 was what the recession of 2020. So COVID pandemic was what brought this down. Then we had our 2-year up. The next one, 2 as well. The recession was what brought this down into our bottom. Then 2 years we went higher. The next recession, it was already down. We went 2 years higher. Then the recession brought it back down again. Next cycle as well, we were already down, 2 years up. The recession brought it back down again. With the recession at the red zones. So every time we either have a recession right before we bottom, or we have a recession after the 2-year gone high, then we have a recession bringing it back down, which has happened every time. So that might likely occur in this time as well. So in this 2031 to 2033 period, we might do what he wants to do. I'm not here to predict what is going to happen, but what is likely going to happen, 2031 to 2033, we might have a recession which will bring oil prices down. Then we go higher for 2 years, or we will not have the recession here. We then bottom in 2031, we go up for 2 years, then we have a recession bringing oil prices down. This is what has occurred every single time and is likely going to happen. So right now, we just a wait and see approach, wait for the next 5 years and see what is likely going to happen. Obviously, this is not guaranteed, but assuming this should occur, this is going to happen in the next 5 years. What are we going to do now? 2026. That is why it's important to hit the like button and subscribe so you know what is going to happen in the financial space. So let's go back to the recent recession, which is 2020. So assuming we have this in our mind, we are going to know from 2020 to 2022, we are going up in crude oil prices, and you can interpret that in any way. If you're a business owner, you know your cost of your goods are going to increase. Even if you're a trader, you know how this can be traded. If you are not a business owner, you're not a trader, a normal human, you know your goods and services are likely going to increase for your household. So cost of living is going to increase based on this chart. So you don't necessarily have to be a business owner or a trader, but you need to understand this so you can make decisions on your own before they occur. So going back to the chart, if we know this, we will know this is likely going to happen for the 2 years. So from 2020 to 2022, we know that is going to happen. So from 2022 to 2025, that is where I spoke about Bitcoin, which if we know these cycles as well, we will know Bitcoin is likely going to go higher in price. So from 2022, which is here, to 2025, which we were here, is Bitcoin is likely going to go higher. Not only Bitcoin, we can even look for Amazon. So our ticker symbol for Amazon is AMZN. We'll get Amazon. We know what the ticker symbol is. So going to Amazon, we also know from to that same 2022 till 2025, we are likely going to go higher. Why are we likely to going to go higher? Because it also has its own cycles. So this is just understanding across all the markets. So looking at Amazon, you can see 7 bars. We are on the 12 months, so it means 1 bar it means 1 year. So this is 7 years. From this bottom to this bottom took 7 years. Next bottom is here, took 7 years. Next bottom, 7 years. So you can see from 2001, 7 years later, 2008, 7 years later, 2015, 7 years later, 2022. Looking at this alone, we will know from 2022 to where we are now, or even 2025, we are likely going to go higher. Not only that, we can look at Netflix. The ticker symbol for Netflix is NFLX. So looking at Netflix as well, if you go to Netflix, we also know from 2022 till 2025, we are likely going to go higher. Why is that? Because we have a 10-year cycle on Netflix. From this bottom of 2002, 10 years later is 2012, 10 years later is 2022. That as well, we will know we are likely going to go higher. So just using the recent recession from 2020 to 2022, we know oil is likely to go higher. From 2022 to 2025, we know Bitcoin is likely to go higher. From the same time frame, we know Netflix is going to go higher. That same time frame, we know Amazon is going to go higher. So now from 2025 to 2026, this same analysis or this same understanding made us know Bitcoin is likely to drop for 1 year. That is where we are now. So from October of last year to the possibly October of this year, we are going to peak in October and come in likely bottom in October 2026. That is where we are now in this time frame. After we bottom in Bitcoin, is likely going to go higher. But aside that, dollar is about to strengthen from 2027 going. So I'm using this just to show you that there are cycles and things are always happening. So we don't need to sit on our hands and wait for this move to happen on oil in the next 5 years. We can see there are other markets which are moving right now for 1 year, October 2025 to October 2026. To possibly October 2026, we are likely going to drop in Bitcoin. 2027, we are going to strengthen in dollar. I'll later talk about how dollar controls the forex market and why we are likely to strengthen in dollar for 2027 to 2028, even 2029. So as we are going, you will see the markets and how they are turning. Right now, we are focusing on Bitcoin, but I'm talking about oil 5 years ahead of time. I might likely talk about it in the next 3 years' time. But this is something which is important for us to know so you can understand what is likely going to occur. This is not just prediction, this is just chart understanding and market analysis.